Hello and welcome to another episode of Earth911 Sustainability in Your Ear. I'm Mitch, Ratcliffe, your host, and of course we are back with another interview, but this is something new. We're beginning a series of discussions about environmentally responsible investing. And you know, that requires that we apply carbon sense thinking, says our guest, Doug-Heske, who's the CEO of Newday Impact Investing. So we're beginning a series of conversations about making informed decisions about stocks and funds. We're going to start with a comparison of the emerging solar industry and the declining fossil fuels industry. Doug, welcome to the show. Today we're going to talk about Sunpower, First Solar, Canadian Solar, Sunnova, Exxon Mobil, Chevron, British Petroleum, and Royal Dutch Shell. Sounds like the old and the new are coming into contact in this conversation. Where should we start thinking about our energy investing decisions, Doug?
Mitch, great to see you again. So good to be back on the program. So if I may, I'd like to provide some sense of what's going on in the space right now. Mm-hmm. Climate change and social incohesion are a collective action problem today, a consequence of shared behaviors that really cut into the heart of how we work, live, and play in modern life. It also demands the actions of citizens, government, faith-based institutions, and corporations to solve. And this is what's really interesting, is that the paradox today is that people at the forefront of climate impact, at least in their own minds, are rarely the people who have contributed much to climate change through their small carbon footprints. But climate change has become this really defining symbol of humans' collective relationship with the environment, and one that every one of us has a responsibility to address and now incorporate into our daily lives. There are some amazing organizations, you've referenced some of them, that do incredible things for our community, but many that don't. Sometimes these organizations are led by naysayers who have powerful roles in government and industry, and sometimes for their own reasons have chosen to either put their heads in the sand or selfishly profit. They oftentimes are standing in the way or in opposition to social and environmental change, and these naysayers contribute to all of this white noise that exists in the press, the banter, the chatter, which is really working against progress today. So there couldn't be a better example of this today than the fossil fuel industry. Mm-hmm. So one of the things that I think that's going to be really important for our audience to understand is that fact of the matter is that carbon emissions are the primary cause of global warming today. It's irrefutable.
Unfortunately, people continue to argue that point. But you know, let's just assume, for the purposes of all the conversations we're going to have, and folks, please take this to heart. Climate change is happening because of human CO2 emissions.
Yeah, no question about it. You know, globally speaking, the primary sources of greenhouse gas emissions are electricity and heat, transportation, forestry, agriculture, and manufacturing. But energy production is accounting for 72% of all emissions today. Mm-hmm. And the bottom line is that 20 fossil fuel companies can be directly linked to more than a third of all greenhouse gas emissions in this modern era today. 480 billion tons of carbon dioxide equivalent since 1965. So while you addressed some of these organizations like Exxon and Royal Dutch and all, there's a long list of others, including, you know, organizations that are based in the MENA region and some in South America as well. So, you know, the other part of the problem here that I think is important to recognize is that fossil fuel companies historically have stymied efforts, driving widespread false perceptions, tried to conceal the adverse impacts of its products. So there have been countless reports that have been published by the Union of Concerned Scientists that have offered report cards for some of these organizations and the work that they've done against climate change initiatives and things like that. So that ends up becoming really, really challenging, especially in an era where we're trying to do as much as we can to address the problem. So
should we think in terms of divesting and not putting any money into these companies, or Are some of them starting to actually make changes to move away from fossil fuels? Can we take them seriously when they, for instance, Shell has this hydrogen deal with the Department of Energy. British Petroleum has a unit called Light Source, which is doing a big solar project in Colorado. Are those genuine efforts or are they wallpaper?
Yeah, that's a really good question. And I don't want to take anything away from the work that these major fossil fuel integrated energy companies are doing, because I think all of that ends up becoming important. Mm-hmm. But it is really hard to understand, to know what to believe anymore. And you've had circumstances associated with Exxon Mobil just over the last year where you've got major lobbyists that have been out there telling one story, and then the CEO of the organization, Keith McCoy, who has backtracked on what lobbyists have said regarding their support or working against climate change. That ends up becoming a big challenge because nobody really understands, what to believe. So, I don't think that there's any question that the major integrated oil companies are going to be around in perpetuity. They're not going away. But our, role and desires as a community is to get them behaving in a more responsible way. And some of them are starting to do that. So, BP and Royal Dutch is a great example. They have made big efforts over the course of the last couple of years to introduce hydrogen alternatives into their energy production. We're still a ways away from having this be a technology that is widely adopted, and it's going to be quite expensive as well. But there are very few organizations that are better prepared to pay for this than the major integrated energy companies. So,
or with as much motive to do so because they want to preserve their business. Now,
that's correct.
Yeah. Would you recommend looking at investing in any of these companies? And let me ask a couple of questions about that. So British Petroleum's price to earnings ratio, which is a generally accepted way of assessing the valuation of the company, is only 8.5 compared to the industry average of 30.1. Is that an undervalued and potentially valuable stock to invest in because they are engaging in solar research and investment?
Possibly. But one of the things, just given the nature of our organization, is that we do not invest in any company that is a part of the Carbon Underground 200. So those are direct energy producing companies, suppliers, service companies. Mm-hmm. And this effort has to start somewhere. So divestment is a part of the problem, or a part of the solution.
Right.
The other piece of it is really identifying which renewable energy companies consumers, investors, institutional investors can take advantage of.
Before we start going down that path, though, let's talk a little more about the oil companies. Exxon, for instance, recently declared that carbon capture failed. They had a $2.4 billion project, if I remember the number correctly, that they said just didn't work. Is that a sort of a PR stunt to undercut climate change response?
I don't want to characterize it as a PR stunt, although I think you can look back at some of the things that Exxon Mobil has done that lie in close association with that. So you had the circumstance that I had characterized earlier where lobbyists are out talking about the direct efforts that the organization has taken on to undermine the efforts around around renewables, around the fossil fuel industry, or the legitimacy of climate change and things like that in general. So could you put that in the same camp? Potentially. There's been a lot of back and forth discussion at Exxon Mobil regarding legitimacy of carbon capture and things like that.
Right.
Does carbon capture work? Yes. Is it expensive? Extraordinarily expensive. Is the technology where it needs to be, whereby it can be universally applied to, major carbon manufacturers like cement manufacturing companies and things like that? No, not yet.
Mm-hmm. Well, they sort of said, we're done. We're not even going to invest in this anymore. Was that the wrong decision from your perspective as somebody who thinks about where to put your money to work?
Yes.
Okay, I think that's a clear and concise answer. Thank you. Now, the other thing I wanted to ask about this is, their PE ratios, particularly British Petroleum at 8.5, as I pointed out, is very low. Is that a sign that people are already divesting from these shares?
The traditional fossil fuel energy space has had a really challenging last decade. And as a sector in the market, it's been one that a lot of organizations, a lot of institutional investors have stayed away from. Now, that's changed over the course of the last 6 months with a major tick up in energy prices due to supply concerns and things like that are contributed by a lot of other issues today. So, longer term, if you're a believer that these integrated oil organizations are going to transition to more of a renewable environment, does it make sense to buy a company like that at the valuation that it's at? Possibly. I think fundamentally for us, though, just given the work that we do today at Newday, we won't do that just because of the nature of the business. There may be a point in time when these organizations become much more advanced in their thinking around the support of renewables, when they stop undermining efforts associated with, climate change and things like that we would give consideration to that.
So your carbon sensical approach says just don't go there.
Completely stay away. There are other alternatives in the energy space that you can take advantage of without having, the ongoing risk to both our world and risk associated with the deterioration of the traditional energy business as well, at least for the time being.
So tell us about the solar sector and the companies that you think we should be looking at today.
Yeah, the solar sector is one that we spend a lot of time understanding today. There are some really interesting companies to take advantage of. There's been a big change in the solar sector over the course of the last couple of years as well. And as you likely know, that China, as an example, has made 80% of the world's supply of solar panels.
Right.
But buying Chinese solar panels to reduce emissions is a little bit like using gas to put out a fire today, right? A solar panel made in China has about double the carbon footprint as a similar panel manufactured in Europe or the United States.
Why is that?
That becomes a really important issue because of their China's dependence upon coal energy.
Okay.
And that's the bottom line, right? So there are some really interesting organizations just based here in the United States that not only are they less dependent upon traditional fossil fuel for production purposes, but they don't have the same kind of challenges that China's having today associated with labor transfer programs and things like that. And that's been a big concern, especially as of late, for the Biden administration, which is why we're seeing the administration blocking supply chain products that are coming in from China today. That's a big opportunity for the U.S. to step in, especially given Chinese dominance in this area of the marketplace. But it's going to take a while for us to, for the United States and other Western societies to get up to speed in terms of production, necessary materials to produce. So before we go to the materials, because that's a really important question in terms of these industries' ability to stay on,
there's two reasons just to avoid Chinese solar panels. And that is, one, that they are fossil fuel energy intensive to produce. And the other is that, particularly in the case of the Uyghur population in Western China, they're being forced to work in these facilities. They're slave labor for all intents and purposes.
Right.
You think that consumers in the United States are ready to understand those two values, or those two facts are contrary to their values and pay for American supply as an alternative?
Well, they are certainly contrary to American values, right? And I think that the other component here is about buying American, right? And we are and should continue to be a leader in renewables over the course of the next couple of decades. This is something that is great for our community, great for America as a whole around the creation of jobs and things like that. And the Biden administration understands that today. And, they are, as an example, we'll talk about this when we talk about one of these companies for solar, which is an Arizona-based company. But they have built a new manufacturing facility in Ohio, bringing new jobs to Ohio, but their technology does not require polysilicon and has a significantly lower environmental impact, at least as it compares to the work that's going on in China right now around coal-fueled energy production facilities.
Are you concerned about access to rare earths and other basic materials that are used in the production of solar panels? Because we're also, to a great degree, dependent on China for rare earths.
Yes, I am. Like I said earlier, I think that this is going to be something that we need to contend with around supply chain issues over the course of the next couple of years. It's really difficult at this stage to understand where all of this shakes out. I think that China is certainly very, very determined to be a leader in this space. So I think from a production standpoint or a supply chain standpoint, that things will look vastly different a year from now when versus where they are today.
Do you mean that China will be more dominant because they've continued to produce through these shortages and therefore selling more globally than we are?
I think they will continue to sell more globally, and I personally believe that there will be a recognition, at least in part, that behavioral practices need to change there as well. I hope that's not wishful thinking, but China understands which side of their bread is buttered, right? So, and I think that we are likely to see some change over there over the next year as a result of that.
One would hope so. Obviously, the current crackdown on private enterprise is very concerning because the government can mandate that those companies behave very badly.
Yes.
Certainly, the Chinese Communist Party can behave very badly. Now, let's talk about the individual companies. You called out 4 that you wanted to cover. Sunpower, by the way, I own Sunpower in my portfolio. First Solar, Canadian Solar, another company that I hold, and Sunnova. Sunnova is an interesting one because so far they haven't even produced a profit. Why are they a good company to be thinking about now?
Yeah, and I think that just by way of first comments relative to all of these companies, I think that all of these are Western manufacturers of solar panels or solar panel components. So I think that they are all legitimate companies to own for the longer term. Okay. And, there are some timing issues relative to some of these in terms of what the appropriate entry points would be for them. And there are some of these that we like better than others as well. So, it's been a very challenging market for solar companies, given some of the supply chain issues that we've spoken about earlier on in the conversation. But Sunnova, at least as of today, has recently expanded its revenue and customer base in a really meaningful way. And it is growing off of a low revenue and customer base, which is going to be important going forward. Higher growth in percentage terms is easier right now for them to show accelerating characteristics off that base.
And they seem to be in a really good place because their business focuses on the management of installations. And so they create an annuity by investing in a facility and then monetizing it over the long term, where many of these companies tend to sell a product and then that's their only opportunity to profit. Is Sunnova in a different category in that sense?
I don't know that it's in a different category. I think that, you're right in terms of their approach to the business. I think that they are, as an organization, a bit better off or have better near-term growth prospects, but at a higher risk as well, partly because of that, narrower approach that they take. So it's a smaller organization, but it is growing fast. They currently have more than 500,000 customers today. And so I think doing extraordinarily well, but I think have some short-term challenges.
Well, yeah, definitely. I mean, they have missed their estimated revenue the last 3 quarters, and I think that accounts for why they are currently pretty depressed in terms of value. Do you see them on a good path for customer acquisition? Are they setting up facilities in the right places with enough customers available to grow at the pace they need to?
I think so, yes, and I think that you can say that much about any one of these companies as well. And, our approach, similar to the approach that we adopt in a lot of the portfolios, is about diversification. So it's not about picking one organization over the other, but creating a basket of these. And it is a market that's going to change significantly over the next couple of years. So I think that you want exposure to a number of these different companies.
Certainly agree that that's a great time to think about solar now. And of course, everybody listening should keep in mind that there's a lot of risk involved in investing. But let me move on to Canadian Solar, which is an intriguing company for a couple of reasons to me. One is that Canada has a lot of rare earth minerals and has been more willing to mine them, which has environmental consequences, but more willing than the United States. And on the other hand, their PE right now is at 45, and that's much, much higher than the industry average and much higher than all the other companies on the list, except for Sunnova that doesn't have profit. Why have they actually lost almost 4% in value over the last year?
Yeah, Canadian Solar has a rich valuation today. Even still, given the fact that they have sold off. So they have beat their earnings estimates in the last couple of quarters, but only marginally. And uncharacteristically, the company's top-end guidance wasn't surpassed, which ends up becoming a big challenge for them as well.
Right.
So there are some margin concerns at the organization right now. The supply chain issues are only going to further complicate that as well.
What's their path to growth?
Yeah, so the company has quietly added, new downstream products and services to its portfolio, and has really created a different balance in their product stream that turns standalone solar modules into solar systems more comprehensively, including mounting equipment, inverters, and then even battery storage solutions. So I think that, for the investment community in general, that has largely flown underneath the radar. I don't think that it's actually been given adequate consideration into their valuation, which is one of the reasons that we like the company.
Let's then move to First Solar. I want to talk a little about allocation across these companies, but let's talk about First Solar, which is it makes things and it operates systems like the other companies we're talking about. It's at a 20 PE, so it's at a discount to the average in the industry. It's performed well over the last several quarters. Why is First Solar somebody to pay attention to?
Yeah, so out of all of the companies that we're speaking about, this is personally, one of my favorites. So, and I do think it's an appropriate time to be entering the stock, buying the equity today. The company has really gone back into a growth phase. It's shed all of these legacy assets that were really creating a burden at the company And they have become much more streamlined today. So, they used to be one of the industry leaders. I think that they probably still are in solar panel manufacturing, going back several decades. But there has been an incredible amount of new competition that's come into the space as well. So, I think that there have been some big things that are potential catalysts for future growth here as well. They have announced a number of new manufacturing expansions that will double its capacity. And as those things come online, I think that the valuation will continue to contribute to earnings growth going forward.
And those new facilities are North American and European, not Chinese?
Correct.
Okay. Now, do any of these companies have Chinese exposure because they're relying on material or products coming out of China?
They do. And I think Sunnova is the one that has greater exposure.
Okay.
I'll have to go back and do some research on that. So
we'd love to follow up on that in one of the future conversations. Yeah. Now, the last one I want to individually cover is Sunpower. And Sunpower is a really interesting company. It had a huge run last year. It went from about $20 to $90, but the last year has not been the happiest. And again, I just hold this stock. It's down about 50% from its high and currently trading at 9.9 earnings. But it beat every quarter for the last year. Why is it currently apparently discounted to the industry average?
Yeah, you're right. So their first and second quarter 2021 results were just marginally above Wall Street consensus. So I think adjusted non-GAAP EPS of 5 cents and 6 cents beat estimates by 3 cents and 2 cents for Q1 and Q2. The challenge is that revenues were stagnant and just slightly above $300 million per quarter. So the other part of the problem is that forward guidance is something that is concern going forward for the company. So for the company,
is that a supply chain issue primarily that they're facing shortages of basic materials?
I think, the supply chain issues are going to be one component, not so much historically speaking, but I think going forward. I think the big contributing factors for lower than expected revenue was that there was a slower than expected rollout of the company's new SunVault residential battery storage solution. That's one component of it. And I think that the big challenge is that when you adjust guidance going forward, it's very much disappointing to the street, right?
Sure. Do you think that's a technical issue? I mean, that they're really having trouble solving hard technical problems?
I don't know that it's a technical issue, and I don't think that it changes the company's fundamental prospects going forward. I think this is another one of the solar companies that you would really want to own for the future. They're a great growth story, and I think that as we get through some of these supply chain issues over the course of the next 6 to 12 months, we'll start to begin to see earnings recovery at the organization. So
Newday has a couple of different portfolios, solar-related, solar manufacturing and solar or energy management that would cover these companies. And that's certainly one way that folks can invest. If they decide they want to try to do this in their own portfolio, how would you suggest they take, let's just say, $10,000 and spread it across those 4 companies?
So I think as we had talked about earlier, I think one of the challenges with these 4 companies is just allocation of risk. So, I would be weighting Sunpower and Sunnova over Canadian Solar today. I think it's also okay to divide allocation of capital up equally. I think what I would encourage everybody to do is not just think about solar energy companies or solar companies as an isolated basket. I think that there's a lot of fascinating technology that's going on in the renewable space in general. We are, despite its really high valuation right now, are big advocates for owning a position in Tesla, as an example. Like people typically think of Tesla as an automobile manufacturing organization, but the reason that Tesla has the valuation that it has today is because they will continue to be a dominant player in battery storage going forward.
Yeah, and they are building large scale battery facilities to back up our electric grid already. But even in the home, their power wall, as well as the solar roof, is an example of a comprehensive approach to renewable energy for consumers, which I think is what puts Tesla so far out in front of everybody else. So would you include Tesla in this allocation of solar investment?
I would include Tesla as a core holding in any portfolio right now. And, I think diversification is the key. I don't think that you're going to get adequate diversification by allocating to 4 individual solar companies. There are funds, as you had described earlier, that you can participate in, and ETFs. And of course, there are Newday portfolios as well that have a higher concentration of renewable energy companies as well. One of the things that we've done as of late is that we have been in the process over the course of the last 6 months of developing what we're identifying as a climate action portfolio. But across the portfolio, we are net negative with reference to GHG emissions for the aggregated portfolio for all 60 companies that are in that portfolio. It will be a first of its kind. So it's climate positive and GHG emissions negative. And
that's significant. And let me just underscore what you said, because you said it in slightly technical language. But you're saying that the 60 companies that you have in that portfolio, or that collection of portfolios, is actually net negative carbon now, which is incredibly encouraging. The fact that those companies could do so. Do you see that as an indication of where the economy all up is going, or is that something that you think is still isolated in a small sector of the economy that is taking climate change seriously?
It's changing every month. And I think that every one of these companies that's in the portfolio is taking seriously their obligations around addressing climate change. And each one of these companies is the leader in their particular industry group around reduction of carbon footprint. So across the portfolio, it is net negative. So there will be, of course, companies in there that individually are negative, and then some that are positive as well. But across the portfolio, they're net negative. But all of the companies in their entirety are leaders in reduction of their emissions.
And how can our listeners find out more about Newday Impact?
Please go to our website, Newday Impact. You can also download the Newday application in iOS or Android at Newday Impact. And any listener is also free to either give us a call or send an email in to learn more about the work that we do.
Well, Doug, I want to thank you for sharing your carbon-sensical investment advice today.
Great, Mitch. Thank you very much. And I look forward to this ongoing discussion as we try to address some really, really important things relative to climate change and ESG investing in general.
We've been talking with Doug-Heske. He's the CEO of Newday Impact Investing. You can find more about them at Newday Impact, all one word, newdayimpact.com. They have an app that you can download and manage a portfolio of socially responsible investments. They cut those investments a variety of ways. So if you want to focus on labor practices or encouraging the participation of women in the economy, they have a portfolio for you. Do check it out. Now, we did talk about a number of stocks during this conversation, and we encourage you all to do your homework before you do make any investments. But just to reiterate, Exxon Mobil, Chevron, British Petroleum, and Royal Dutch Shell, the judgment is stay away. the carbon-sensical thinking says, let's not give those companies more ammunition to continue to damage the environment. On the other hand, Sunpower, First Solar, Canadian Solar, Sunnova, and as Doug mentioned, Tesla are great holdings to start to invest in the foundations of the renewable energy economy. So check it out, newdayimpact.com. We're going to continue this conversation every 2 weeks with Doug, talking about another topic and helping you understand how to make a better and more environmentally responsible portfolio. This is Earth911 Sustainability in Your Ear. I'm Mitch Ratcliffe, and we're looking forward to our next time with you. In the meantime, please share this and other podcasts that we have produced with your friends, family, neighbors, people that you meet on the street. Let's get them thinking about how to change our world for the better. So, folks, in the meantime, take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. Have a green day.